Tosh, this is one of the most exciting podcasts that I've been looking forward to. I was even able to loop in Daniel from our team at the Impact, and I can't wait to dig into this because, like, in terms of my personal fascination, the electrification and specifically electric vehicle charging station infrastructure, as boring as it may sound to an average listener, is one of the most exciting spaces to me. So I can't thank you enough for coming on and willing to share a little bit more about ChargeNet. But for the audience that doesn't know what ChargeNet is, I would love for you to give a quick introduction on your background and ChargeNet. And I'm sure the audience already knows who Daniels is, so we'll leave that for the show notes.
Well, first I want to thank you, Swarnav and Daniel. Thank you so much for having me on, and it's such a pleasure to be able to, have the opportunity to share the journey that we've been able to have, and talk to how we've been able to have some of the outcomes that we've been able to have so far. We still have a long way to go, but we're definitely on the right track, and we're really hopeful and excited about the future that we'll be able to build, supporting electrified transportation and supporting all the infrastructure that needs to get built to support all the EVs that are going to be coming on the roads. So just a piece about ChargeNet. ChargeNet is a developer and a software provider. We develop EV fast charging stations that also integrate renewable energy, solar, and energy storage. And we use our software. We have two software platforms. We have a back-end software platform that aggregates and optimizes all those assets and essentially does all the asset management and optimization of those assets and trying to capture as many different types of revenue streams and opportunities as it can. So, a DERMS platform through and through. And has the capabilities of doing virtual power plants, B2G, all that stuff. Awesome. And then also, yeah.
So this is a massive platform to kind of unpack, and I'm sure there's like storylines there for how you guys came about deciding which avenues and which revenue sources to attack first. But I guess what would be really valuable context is from like the earliest days, what was the problem you guys identified in the electric vehicle infrastructure space that led you guys to start ChargeNet in the first place?
Well, I think the big one was that, there's a noticeable gap in the renewable energy world with this market being addressed. A lot of the C&I market that's getting addressed is large C&I, medium C&I, not a lot of small, medium C&I. And then residential, right? So, but there's been this gap over here, and for me, it's always been interesting to figure out, what are some ways that we can find opportunities to decarbonize, where we can kind of consolidate those opportunities together as much as possible, right? Kind of talking about the DERM side, like our CTO Rebecca Wolkoff, she, that's her background. She's built DERMS platforms for large, vertically integrated utilities, and has patents in the space and has developed our patents as well on our optimization. So,
so you guys saw an opportunity to look at electric vehicle charging stations almost as a flexible grid asset of sorts, whereas traditional electric vehicle charger developers look at it purely as an amenity for most property owners. I think ChargePoint would be a perfect example of one. Even the hardware players, they look at this more as a asset that can serve as an amenity and a new revenue source for property owners. But you guys see it a little bit differently, as electric vehicle charging stations are the gateway or a valuable resource that grid operators need to utilize as a flexible load source. Is that a fair understanding of the problem that you guys identified?
Yeah, it's that, and it's also that, like, from a business perspective, trying to hinge on, public EV charging, like, someone paying, X cents a kilowatt hour to pay back the investment, from an investment perspective, trying to leverage that. I think early on, like my peers have been able to do that and convince investors that this is going to be lucrative, and they've been able to like grow and put more chargers in the ground, and be successful that way. But going at it where we're at right now, for me to go to an investor and say, hey, I'm gonna buy someone else's chargers that they're making and then put my own front end on it, there's no difference between me and like ChargePoint or EVgo or anyone else, right? Like, the way that I see it is, from the overarching point of view, when you look at the major contributors to climate change being, if we can agree that they're animal-based food products, internal combustion engines, and fossil fuel generation, there are very few places where they all coincide, right? The QSR parking, the fast food parking lot, is where they coincide. And you look at it from like a singular point of view, it's not that big of a deal, right? Like, what is one QSR? When you look at it as an aggregate, like just in California alone, there's 31,000 fast food restaurants. Just in California.
31,000.
31,000. And you look at where they're all located, right? They're all located in areas where you would want to have DC fast charging infrastructure along less than an eighth of a mile from the on-ramp, right there on the on-ramp and off-ramp of a highway, in low-income neighborhoods where, there's challenges trying to deploy equity resiliency, funds for putting DC fast charging infrastructure and solar and energy storage. And then these are also areas where utilities are like, they have aged infrastructure, and for them to do T&D upgrades is very costly. They don't have the budgets for it. And so, like, for us to be able to provide energy storage, solar, as an offset to the building load, right? And be able to provide a DC fast charging resource where, from an investor's point of view, like, we're not really concerned about the EV charging utilization or the revenue to a certain extent, right? Like, we're not hinging the success of our business in everything to pay back on that, right?
You see it as grid services as the real revenue source.
Grid services and kilowatt hour offtake.
Got it. So where are you guys at today then?
So we're building our first site right now. The solar structure just went up today.
Okay.
So yeah, so we're starting to be paneled up by the end of the week, and then the rest of the DC fast charging infrastructure and the batteries and switchgear will go in. So we should be live with that probably in the next few weeks. And then we already have another 7 projects coming really fast behind that, like before the end of Q1. And then our pipelines, we have a pipeline of about 120 more locations, both in Southern California and the Bay Area, that we're going to develop with our partner.
Okay, so then I think there's
all the Taco Bells. So, yeah.
I like Taco Bell.
yeah. I mean, so what's great is like this is a really great opportunity for those groups like Taco Bell and the large QSR groups that they've some of them invested in large solar farms and wind farms to offset their energy, like McDonald's and but like some of them some of the other ones have kind of struggled, and they have like really ambitious ESG goals, and they're looking at ways of trying to get there, and some of them have taken on incorporating plant-based items into their menus, not to replace but to be creative, right? And they're having a lot of success with them. I mean, I would have never have thought that Beyond Nuggets from KFC would be like, they would be sold out like every day, you know, at least where I'm at. So like, this is an opportunity for them to extend their brands out into the parking lot and to like access, you know, access EV drivers and access them with, you know, new and exciting menu items that matter to them and opportunities to kind of explore new exciting business models. Like, you know, one thing that's really exciting to see is Taco Bell's Taco Lovers subscription model, where you get a taco a day for 30 days for $10, right? I mean, that's exciting for us because there's an opportunity to be able to leverage that and leverage, you know, the strength of our partners' brands versus trying to, you know, hinge on ChargeNet, which to Tesla or to EVgo or to any of those guys, we're no one. So, you know, and it's okay. We're not trying to be anyone. We want to leverage the brands that we're working with, and you're a support
ecosystem for these fast food restaurants that want to also bring in renewables to their local site and also attract a new customer base and get more feet in the door. I guess this, like that vision alone is an ambitious one because it's related around infrastructure, right? Not everyone needs to necessarily be building a SaaS company that goes to $1 billion, and especially in climate, there's these kind of solutions that are so important to implement. And I think that's what made it so fascinating bringing you on, because I think you bring a really interesting perspective coming from the founding story and how you identified this problem all the way to the funding side. Because I think a lot of people have great ideas as to where they could deploy more infrastructure. They never get off the starting line. And I think Daniel's also got a lot of context on the financing and funding front. So I'd love for us to start again back at the beginning and explore those early days before you've gotten all these pilot projects lined up, your first site going live. This is a great spot to be, and you got years ahead of you in terms of growth. But going back to day one, once you identified this niche and this problem area, how did you go about putting together the right team? And then how did you go about getting the right investors around this? Because where did you even start? What was that challenge like? And what was that journey like? And that's a big loaded question. I completely hear that. But let's try and break that down part by part.
I've unpacked that before, so I'm pretty sure you can do it again. But yeah, you know, I kind of had a retrospective after my time at NL, and I started to look at, you know, kind of where the gaps were. And, you know, what was interesting was that, you know, they'd made some acquisitions in different spaces, and, you know, and with Enernoc and eMotorworks and then Demand Energy Networks, where me and our CTO Rebecca came from, and, you know, it made me start to think about like where, because I developed a lot of in my previous career, like a lot of utility scale and large C&I projects, energy storage, solar storage, microgrids, in different, you know, sectors, you know, in Mush and then, you know, large C&I. And there just really wasn't anyone addressing this. Like, there were some opportunities that would come across to me, like, you know, Burger King franchisee and like Boston wanted to do this, but like it was completely disregarded because of the size of it, right? But it really got me thinking about, like, well, what does that look like as an aggregate, you know? And it made me start to think about like EV growth in general, and now that we're having $30,000 and below EVs starting to hit the market, like the Fisker Ocean and the, you know, the Hyundai Ioniq 5, which is, you know, those, and also business models that are allowing people with lower incomes to be able to, you know, access these vehicles and operate them, and be able to, you know, get them from place to place. The principal problem is that, those communities aren't, like, from the residential point of view, like, those multifamily landlords aren't going to really be, they're not putting charging in, to attract more tenants. I mean, they just want their rent,
Right.
So where are those people going to charge, right? And then you also think about, like, service people, more blue collar that have, trades folks that have, EVs that are assigned to them, and not having the ability even to put that in there where they live.
Right.
So they're going to have to charge somewhere where they go to already. And this is where they go to already. So we have an opportunity to meet people where they're at. And to really give them a customer experience that they're already used to, right? They're already used to, like, Taco Bell, right? They're already used to Jack in the Box or McDonald's, whoever. That's familiar to them, right? So, like, why shouldn't charging be something that's familiar to them also?
So, Daniel, I'd love your opinion a bit on the funding side. Because, like, Tosh, once you identify some things of this nature where you see this market gap, because that's a really interesting perspective, because there's another company called Envoy there, maybe you've run into them, where they found electric vehicles as an amenity within apartment complexes is a huge opportunity. They started off in the low-income space, almost providing it as an amenity to property owners, and now they work in the luxury market more so, and that's where they've really found huge success. And I think what you've identified is a really, really unique niche that electric vehicle owners or manufacturers are starting to target, and you found a place where they're going. And with the DC fast charging, 5 minutes in and out the door instead of waiting in line, you get more feet in the door, potential marketing. Like, how do you go about even fundraising for something of this nature, and your experience definitely helping? Is like, how do you navigate that? Because this is not something you can raise $1 million and then turn around and be doing $10 million in revenue the next day, like certain SaaS companies can. But
yeah, so it's just knowing your story, right? Like, for me, I had to early on, like, it wasn't just about like, oh, I'm gonna do this and I'm gonna build a company around it. Like, there had to be a watertight business, like, revenue model behind it. And so, like, and it had to be in a market where, like, you could like get investment grade returns, and you could have, like, a large asset, project financier, asset manager, like, it'd be something above, sort of above institutional, something that they would be excited about, and also a way for them to own assets in. So
you had to target non-VC funding?
No, we didn't target non-VC funding. Our first round, our pre-seed round, was a note, and that was done through angels and high net worth. We raised about $660,000. And then we had a bridge, which was about, I think, 400, I'm not sure. And that bridged us to our seed round, which we closed about a month ago. And that was $6.2 million at a $24.2 million post.
So, that's fantastic. Congrats on that.
Thanks.
Big jump from, 500 and 600K, the bridge, and then that's a great seed valuation. I'm curious, this is really for our audience. How do you think about finding those angels and first investors for that note?
Oh man, it's persistence. It's really truly just not giving up.
But how did you find them? That's really, like, how did you think about that?
A good place to start is, if you want to get straight to it, there's Gust.com, and they actually have a listing. You can look, and basically it's an application portal to all the different angel groups around the country. And I think they even have, like, an angel group in Puerto Rico. And, there's alumni angel groups, there's industry angel groups, there's also, and basically you fill out your profile and you submit. Sometimes they ask some secondary questions, and they'll get back to you. You'll get an email notification if they're interested. They'll set up time to talk. If they're not, they'll pass. But the way that I did it was, I'd never done this before. I mean, this is my first go at it, right? Like I've worked for some startups and sort of startups within large organizations, but like I never thought that starting something would be within my wheelhouse, and I just did it. I just didn't, I just did it. I was like, okay, I'm just gonna do it, whatever. And it's really important to have good guidance along the way. And so once I had kind of like a solid business or revenue model and a business model where I could kind of like talk through and say, hey, this is how the revenues are generated, and if you scale it up this way, it'll look like this, and I can put a sort of 3 to 5 year plan behind it that kind of makes sense, right? And I worked with my local SBDC group, which was the Brink at the University of San Diego.
What's SBDC?
It was the amazing.
I'm asking what SBDC is.
What was that?
What is SBDC?
Oh, it's Small Business Development Corporation.
Okay.
And basically, they help small businesses kind of point them in the right direction with the resources that we need. So, if we're services based, they point us to different loan guarantee programs, basically. But we were, this was a ventral opportunity, and they introduced us, and they advise close to 1,500 companies in the Southern California area, and they're now on their. They also sponsor the San Diego Angel Conference, which we applied to back in. When did we apply to it? Oh, like November of 2020. Yeah, November of 2020. And then we went through the process of elimination, and we were one of the 6 finalists, and we were one of 4 companies that were awarded funding from the Angel Conference, so from the Angel Fund.
Congrats.
Yeah. So they actually led our pre-seed round. And we got a total of something like 220,000 from them and their SPA.
So was it mostly targeting grant programs and angel networks that helped you get your first round of funding? And what was the storyline at that stage? Because you're really talking about a vision and your team. What was the storyline to close that first pre-seed round and then that bridge round? Because, to raise a bridge, you have to have shown promising progress towards the plan that you had in your head for people to give, additional capital. So what was that kind of storyline between those 2 phases?
Yeah, well, the good part was that we had already kind of signed a LOI with exclusivity with, I think, a couple of different partners. The partner that we're going to market with the 130 locations right now, they that initially was sort of the big opportunity that helped us get investors' interest. And we had already started development, and at that point, I wasn't in a position to bring on our CTO, and so we had to kind of wait until we got funded, and then I was able to bring on both my co-founders, Rebecca and Venus. And I already told you where Rebecca came from, but Venus actually reached out to me because she wanted to angel invest in our pre-seed round, and I looked at her background on LinkedIn, and I'm like, she's been at SCE for like 15 years, and she also has an MBA from MIT. Like, she'd be perfect for the company. Like, what? So I talked to her and I was like, listen, I think you should think about joining the team. And like, she's like, well, what team? I'm like, well, so far it's just me and Rebecca, but like, you would be. And, we're able to, it was able to work out where, have two amazing female co-founders and, both there are two of us that are people of color and, the diversity, equity, inclusion is one of the strong pillars that we've built. We're building as part of our organization, and we're so far building a pretty diverse and inclusive group of folks that are, climate change warriors, fighting the good fight with us, and it's going great.
Well, I mean, there's a whole storyline in between. So, just to replay back that story, you were able to land an LOI, which I imagine the biggest takeaway there is that you had already kind of validated the market segment that you were going to go about. So you had identified a problem in a market. And that led to the basis for what helped you through your funding round. And the reason angels were interested is because there was some semblance of problem market fit, I would argue. But then you were also able to, during your fundraising go around, which is basically a world tour, and now it's a virtual tour thanks to a remote first world.
Yeah.
It almost seems like you were able to recruit not only your first co-founder, who was through previous work experiences having that relationship, but you also found an angel investor who, instead of just thinking about, do I take her money, you understood that, hey, she may have significantly more value in partnering with us on this long-term vision we have, and her being an angel probably unlocked even more relationships to other angels. So it seems like that's what helped fuel the fire through the early days. And I think that's a brilliant story about how important team and almost validating a problem is so important in the early funding innings for even a big infrastructure company like what you're trying to build.
Right. Well, there's a third thing too that people don't really attribute, but it's pretty significant, and that's creating FOMO, fear of missing out, and my ability to tell a story and give investors, let them know the time is now, right? And the time is now. It really is now, and these things are happening, and if you want to be a part of it, now is the time. And being, being that's got to be the truth, first of all.
Sure.
But, you have to be able to, harness that and to be able to create that. And it kind of creates its own momentum after that, right? And
so how did you create that FOMO for your business? Because I imagine that led into what enabled you to land your massive seed round, which that's a normal seed round these days. Back when I was running a company, right? Seed round was $1 million. Was whoa.
It really just depends.
Yeah. Well, what's interesting was we actually were intended to raise half of what we closed with, but our lead convinced us to raise more, which was totally the right thing to do, obviously. So that they could lead it, and we were like, yeah, cool, let's make it happen. So,
damn. So then, what was that journey like? What did you have to do in terms of progress? What were the hurdles or the additional de-risking that you had to do between? Because it seems like FOMO is an extreme part of telling the story effectively, and then obviously already having that problem market fit, landing an LOI, having a rock solid founding team. It seems. What was that journey like in between the bridge round and now your seed round, which has let you get to the day where now you're able to actually do full-blown installations? Because there's some companies that may raise their Series B and still not have a product out there because climate problems are damn hard, and most of them aren't going to be solved through software only. So I'd love to get context there too.
Yeah, that's the thing is software's got to enable the hard, there are lots of great companies that are putting in a lot of hardware innovation, like our partner Tritium. they just released their PKM 150 product, which will be available later this year. But like, it's working with partners that understand that like that while the hardware has to support more reliability, more resiliency, and it's got to be able to dispense energy, a lot more energy, a lot faster. That it's also, how you manage those assets as part of a larger ecosystem. That's really what's driving the value of that asset and all the other assets that are associated with it.
So what did you guys do in terms of like de-risking between that pre-seed round to get to that seed round where you technically oversubscribed? It sounds like.
Right. So, it's really building the team. So, Venus and Rebecca joined in April, and then we were able to have some software developers help us, start building the software platform. And then also in the meantime, we started working through the contracts with our partner. And also started looking for potential project finance, and that was pre us closing our seed round in December, so really from April to like I'd say September, there's a lot of pitching going on in the meantime. Revising the deck constantly. I think we have probably 3,000 versions of our pitch deck by now. And then working with our customer to get to the type of contract structure that's gonna allow us to go build, and that's gonna meet sort of the terms that are gonna be important to them. And so, working with that, we started looking for project finance, and we started working through a partner that was able to provide us a term sheet. And that kind of led us through to, gearing up for the seed round. And so, in that time too, kind of leading up to us, really getting closer to securing our lead, we had Michael Zimmerman join our team, who, as our CFO, who's the former CFO of GoDaddy and took them public in 2015. And so that, and then also I was able to convince our lead investor at San Diego Angel Conference, who's also my mentor at the Brink, and is also, had a couple of exits, had an exit to PE with his, he had a solar and wind development company, to join our team full time as our chief legal officer. So yeah, going from investor on the cap table to operator, big jump. And I think he was convinced, kind of working with me to make that move, and that really helped drive that. And then also, having our investors talk to our partner, our franchisee partner that we're working with, and just letting him know, like, hey, this is real. This is a real deal, and we're committed to this, and committed to making this happen, committed to making this grow. And so that really helped.
So you've had a track record of converting investors into operators, which.
Yeah,
that's hard to do. Why'd you go to the other side?
Mike came to me and said, "Hey, I want to invest, but I also want to be the CFO." And I'm like, if his LinkedIn's real, like, yeah, sure, take it, do it. Best decision I really didn't have to make ever.
You said something interesting I'd love to go back to briefly. You said you started looking for project finance before your seed round.
Yeah. Yeah, because,
tell us a little bit more. This is something I actually strongly believe startups really should be exploring as early as they can. Or start thinking about, at least.
Well, it's for us working in a vertical that's not really familiar with, what we're doing, just broadly, I'd say, they have, there's companies that do energy efficiency, in the space, but nothing like this, right? So, but knowing that, they're not going to invest in these types of projects, and it's not really in their best interest to anyway, because we want them investing in what they know, which is building more fast food restaurants, right? Providing more great food for people that love it. We need that, like these projects, like in order for this to work, it's got to be a fully financed solution. So how do you do that, and how do you underwrite the utilization risk of the EV charging stations? And it's really difficult to do that. Like it's you got to rely on like all these different drivers and levers, incentives, tax credits, depreciation. And so what we realized was, we have members of our team have a background in structured finance. This is an area where, we can bring financing to the table. We know how to source it. We know how to manage it. We know how to underwrite the risk. And, we have lots of access to different, capital providers that would totally support us in doing what we're doing. So what we had to do is really present it in a way where, like, here's how it works from an asset owner's point of view. Here's how it looks from the site host point of view. And this is how it looks from ChargeNet's point of view. And so from that, we're able to present them like, pretty clear sort of baseline that they could leverage to underwrite, the financing for the entire project. And so what we're doing is we're raising a debt facility, and it's going to have money from, an LP, from government sources, tax equity, and we'll be able to go and build these projects and be able to scale and get this moving nationwide.
Yeah. So you realized you needed some sort of debt finance, project finance, and it sounded like you had a team that could help figure out that piece of the puzzle.
Right. And we also have a lead investor that's also an asset owner, a separate deal, but they know this piece, and the principal and CEO are one of our board members was second in line at the LPO at the loan program office pre Biden. So so like he understands what needs to happen. They understand, and we have good support and competency in that area.
So I guess then, because it seems like there's a lot of takeaways from your journey that we can really lean into here. And I think for any investor that's out there, first of all, I think for investors and for founders, it's not only your immediate team that seems to be extremely important after you've identified what I'm going to call problem market fit, for the sake of this conversation, but it almost seems like your investors and picking the right strategic investors is just as important as the core team, especially with an infrastructure kind of project. And to your point and Daniel's point, project finance is something that most companies should probably be looking at earlier rather than later in the journey, especially if you're playing with major climate infrastructure like electric vehicle charging stations. Is that a fair summary of what your journey's learnings have been and the challenges you guys have had to overcome over the last couple of years of a journey?
Yeah, it's about how well you can spin as many plates as you can as possible, as fast as possible. That's it, right? So,
well, I think that's one of the most powerful ways to probably put a pin in it as we monitor your journey going forward.
Yeah.
but I love giving founders an opportunity at the end of the show to selfishly promote whatever the hell you want. You want to sell ChargeNet, tell them about a new clothing company you want to start. I've had podcast guests do that.
Nice.
Whatever you want, the floor is yours to educate the audience on anything that's important to you that you think they should learn about or take away from this episode.
I think founders just don't give up, and make sure you can kind of see the arc, through the years of how you're going to build your business. You should be able to visualize it in your head, and you're going to get a lot of no's. I still get so many no's. Like, I feel like a ninja when it comes to no's. Yeah. But it takes a lot of work to get to that place, and it's really ego deflating and humbling, and sometimes humiliating as well. And if you really believe in what you're doing, and you can present that, that it's worthwhile to invest in, go after it with everything you got. And for me, the way I see it is I see the other folks as my peers in the market. It's going to take everyone to make this work. Like, there's not just going to be one successful. I'm not just going to be the one successful business model, right? Like, there are going to be other folks that are going to be successful in different places. It's going to take everyone to make it work, because we're already behind the power curve. Like, in California alone, like, there's only 77 fast chargers for. There's only one fast charger for every 77 EVs in California.
Damn.
Yeah. That's our public charging infrastructure in the largest EV market in the country. So,
well, that's prime for you to at least improve that number just a bit.
Right, yeah. And there's going to be lots of ways to do that, and, we're excited to be a part of it.
I guess with that being said, for any of the ex-founders or employees looking to switch into the climate space that might be exploring on this podcast episode, trying to join ChargeNet, are you hiring actively?
Yes, I'm glad you asked. Yes, you can find all our postings, job postings, on our LinkedIn page.
Okay.
Go ahead, take a look, and if you have questions, you can. I think there's an email that you can ask questions to, and look forward to seeing more people applying to our jobs. That'd be great.
Awesome. Well, we wish you all the success, and I think this was one of the most interesting conversations we've had, especially given your focus in deep infrastructure, which I think is something that is widely ignored, even though it's widely spoken about.
Right.
So I appreciate you coming on the show, Tosh, and I can't wait to follow your journey, as I'm sure Daniel and I will continue to stay in touch as you continue to make bigger and bigger headlines.